Happy Wednesday. We are back for another midweek market update video. Last week, the people loved David so much, I thought I'd bring him back. So, David, go ahead and take it away. Tell us what's going on in the market this week.
Hi, everyone. Look at this. Paul brought me back for another market update to talk the good, the bad, and the ugly about what went on the last week in the stock market. Apologies to my clients who have heard a lot of this before, but happy to provide a little technical insight on what the investment committee's thinking and what we are looking forward to in the market and what we are not looking forward to in the market. Market is about 0.5% higher this week. It feels like a game of ping pong, 1% up, 1% down, 1% up, rinse and repeat. Only about 0.5% higher in the S&P than we were a week ago. Oddly enough, that's what the year-to-date number is as well, about only 0.5%. Now, while that's not a lot of movement in terms of market, there's a lot of geopolitical news going on. We have violence down south with the cartel. Iran is in the news everywhere you look. Supreme Court ruled on tariffs. In that vein, companies like FedEx and Costco are suing Washington to try to recapture some of that tariff money. And then we have companies like Blue Owl, a bit of a canary in the coal mine. They focus on private equity, private credit, dropped 50% and froze a lot of their redemptions. So a lot going on in the news, albeit the market is somewhat flat from year to date. But let's dive right in on some of the good and the bad. So to focus on some of the things that we are watching, again, we can go all day. Most of them geopolitical, do not affect the market near as much as it does folks internally as people, not necessarily market movers, though they pull on heartstrings. Two of the biggest items that we're watching, tariffs. That was a big deal. It feels like deja vu all over again. Here we are, early 2026, it's early 2025. We're going to talk about tariffs and AI, right? Those are the two things that we're monitoring closely. So to focus on tariffs, Supreme Court struck down President Trump's emergency power when it comes to the tariffs. Those are no longer available. There are three options, many that the president mentioned during the State of the Union address, the series 100, 200, 300. The first one is being used currently. The president has the ability to put in a quick tariff for 150 days before congressional approval needs to get involved. There is another route to prevent fair and unbiased trading practices that does require an investigation. And then the third being used is for national security purposes. Certain sectors are being looked at very closely to maintain those tariffs. So there is a little bit of time bought right now with those powers. I'm sure there will be more lawsuits and Supreme Court rulings with these new moves. But tariffs are something that we're watching very closely in addition to those lawsuits going on with some big companies. In the other end, it's that concentration that we have in the tech sector that has largely been pulling back year to date, offsetting some good runs in some sectors with the S&P offset by some pullback in tech. DeepSeek is coming back. We hear some rumblings. There is a brand new V4 model that is going to be unveiled. And what that is a disruptor in the AI sector that we are cautiously monitoring, right? When anytime there is a lost monopoly in a sector with rapid technology growth, this has been the case in the history of the market, that's where things either crest or come back down to earth. And DeepSeek seems to have some cheaper options that might be good enough on the tech sector. In addition, happy Wednesday evening. It is our Super Bowl. They come 4 times a year, Daytona 500, whatever event, NVIDIA earnings. They will be released after hours on Wednesday evening. Stay tuned. Market always gets jittery just because there is so much skin in the game. It is the true bellwether right now for that S&P in 2026. Things that we're monitoring closely that could have some short-term volatility in the markets. But with those down points, if you will, or things that we're cautiously watching, there are some very bright points in this economy, and most firms, including us and Bank of New York Mellon Pershing, do believe we'll end the year higher than we are today, albeit with some short-term volatility. Even though the trade deficit to GDP is in the area of high fives, tariff money is coming in to the tune of 200 to 300 billion over the next 10 years. We continue to monitor tariffs, but that can significantly curtail that trade deficit. I'm originally from Corpus Christi. For those of you that don't know, Well, there's a nice saying that we have: when the price per barrel of oil is in a sweet spot, nothing bad in the market happens. And right now we are in the mid 60s. That is very much a great spot for not only production, but profit. That is a great motor for the market. Construction is up, albeit it's dependent on AI productivity. And if you recall last week, jobs are in the low 4s. That is very respectable, albeit it's propped up by healthcare. The reasons are important, but no doubt about it, folks are working. A lot of good things in the market, but what I would also say is, with our moving averages mathematically, one of the best things is you're already here. You're with us. I like to say our strategy right now is in a Goldilocks. It's not too far, it's not too close. Clients' money is absolutely protected with reasonable leeway. So it puts our strategy in a very good spot. So even though there's a lot of geopolitical news going on, some of them are big market movers, some not so much. Your money's protected here, and that is one of the great things that I have going for the market right now with our investment committee.